Hey everybody, this is Zach for DeFi Gravity Investments, and today I am going to do a annual review for 2025, also give my outlook ongoing for 2026 and farther. I'm going to touch on some of the achievements in terms of technology that have occurred this year, and I'll also discuss why we've seen some subdued price action, cover what's been happening in the crypto markets in terms of pricing, and just kind of give you my thoughts in general. So let's jump into it. So let's start with a 2025 crypto market recap. The broader crypto market took a hit. It was the first annual decline in the crypto market since 2022. The total market cap ended around $3 trillion, which is about down 10% year over year. And most of that came in a very sharp decline in quarter four. I mean, it's kind of insane to even think that Bitcoin didn't gain any traction year over year for 2025, given just months ago we were at all-time highs by a large clip. Bitcoin and Ethereum both felt the pain. Bitcoin closed down about 6 to 7%, while Ethereum dropped harder, sometimes down 11 to 29% in parts of the year. The altcoins, which are basically just anything not Bitcoin and really not Ethereum, those dropped and got hammered even harder, with many of them in a sustained bear cycle since 2024, and Chainlink does get grouped into those sections. But the fundamentals stayed strong with even across the entire market. Stablecoin usage was one bright spot. It exploded up 49%, which is the usage of real world US dollars capital coming into the market. Chainlink's price story, Link followed the altcoin weakness, trading sub $10 by the end of the year, and now in early 2026 we're hovering in the mid 8s. The market cap being under $10 billion, that's a level that we saw over 5 years ago, which by no means it's frustrating, but it highlights the disconnect. It highlights the disconnect of massive real world progress in terms of institutional integrations and tokenized finance versus market sentiment dragging the alts down. So let's jump into the next subject. So I could rattle off a bunch of big numbers and just name a bunch of giant institutions that you may have heard of or may not have heard of, but that's not really going to connect to the level that Chainlink has really been accomplishing giant achievements. So instead, what I'm going to do, I'm going to focus in on two areas, maybe a couple more, and kind of just give a picture of really what's been happening with the team at Chainlink. So first thing I will highlight is a partnership that started with DTCC in 2024 and has only expanded throughout 2025 and will continue to do so in 2026. So let me read you some notes I put together on DTCC and the partnership with Chainlink. So first off, if you're not familiar with DTCC, that would be completely normal because while it's enormous, it is a middleware. It's behind the scenes. Most of the average retail investors or the average person is not going to directly interact with DTC and they're not knowingly using it. But in a very basic sense, it's the back office giant that makes sure stock and bond trades actually finish safely in the US. So when someone buys or sells shares, DTCC checks everything. They match the buyers and the sellers, they move the money and the stocks, and they keep them safe afterwards. So it's like the trusted middleware that prevents chaos in the markets. Without it, trading would be slow, risky, and full of mistakes. So to get an idea how big DTCC is, it's enormous. They handle trades worth quadrillions of dollars every year. So yes, that's with 15 zeros, and it's way bigger than most countries' entire economy. They hold and safeguard 80 to 90 trillion dollars worth of stocks, bonds, and other assets for banks, brokers, and investors. Almost every trade you make in the US stock markets or any bonds go through DTCC. So it's one of the most important utility companies in global finance. And so is it just a, kind of mention the name connection with Chainlink. No, it's an actual real strategic partnership. And DTC isn't just dipping their toe in the use of Chainlink technologies. They're seriously committed. Starting in 2024 and ramping up big time in 2025, they've been working directly with Chainlink on several real projects. This includes getting official approvals and planning to start using Chainlink tech for tokenizing assets in early 2026. Their leaders have talked publicly at large conferences about how Chainlink helps bring blockchain safely into traditional finance, showing real trust and long-term partnerships. And we can also speak about what was already accomplished during 2025 in their partnership. So in September of 2025, just a handful of months ago, DTCC teamed up with Chainlink, Swift, Euroclear, UBS, and about 20 other giant big banks and major institutions on a project to fix what they called the $58 billion headache, which is handling corporate actions like stock dividends, splits, or company mergers. These events used to take days of manually checking and cause tons of errors and delays. Chainlink's tech lets them get accurate, trusted info super fast within minutes and share it with both the old school systems and on blockchain, making trades settle smoother and safer and faster. So DTCC tested putting mutual fund price data as well, also called NAV or net asset value, directly on blockchain using Chainlink. So prices are instantly verifiable and up to date without slow middlemen being required. And then in late 2025, DTCC got the official green light from regulators to start tokenizing real US Treasury bonds on a secure blockchain called the Canton Network. Chainlink supplies the reliable data feeds and secure connections to these digital versions of the bonds, and they can be traded and settled very quickly. The first small rollout is planned for early 2026. Then there's a bigger picture project that I'll speak to, and it's discussing moving from slower to faster settlements for the US stock market. So you may have not heard of this term before, but there's a term called T+2 or T+1 or T+0. So historically, the US stock and bond trades settled in T+2. That means that if the trade, a buy or a sell of a stock, happened on Monday, the money and the shares actually finally move by Wednesday, two business days later. You may have noticed this when you go onto your brokerage, and if you buy a stock, or if you a better example, let's say you sell a stock, you don't have access to those funds for a couple days to transfer them out. That's until that transaction is completely settled. And this was standard for decades, but left settlement risk. One side could default or mess up in those extra days, tying up money and creating headaches. So in May of 2024, the industry, led by DTCC and regulators, switched to T+1. So not very long ago, whatever that is, almost 2 years ago. And they moved from T+1, the one meaning 1 day. So this cut the risk dramatically. DTCC's clearing fund, the safety buffer, so a buffer of just capital they keep, that they can keep things flowing during that settlement time, dropped by about $2 to $3 billion on average, which is about a 20 to 25% reduction in the amount of buffer funds they had to keep. Now, just me thinking about that amount of money, I'm sure there are hundreds of other benefits besides just having to hold that cash there. But even the interest yearly on being able to reduce your amount that you have to hold by $3 billion, at 5%, that would be $150 million. So huge savings on just being able to settle these things quicker. Add on the benefits of more accuracy and all other benefits down the road. So that was a really big win. Less money locked up, fewer failures, better liquidity for everyone, from the big funds to everyday investors. So now that was from T+2 to T+1. With Chainlink's help on tokenized assets and blockchain, DTCC is exploring even faster towards T+0, same day or actually instant settlement. Like it would be like sending cash on PayPal or Venmo, just instantaneous settlement with stocks, bonds, mutual funds. So what occurs is tokenization lets assets live digitally on the blockchain. So where Chainlink provides trusted data, privacy, and cross-system links to make instant, secure transfers possible without all the old delays. This could save billions of dollars more in costs, slash risks further, and open 24/7 global trading. Really, if you think about it, why do we have a stock market that closes and then we have after hours trading? It's a little bit archaic in this kind of digital global world. That would get rid of that. So it turning slow traditional finance into something much more quicker and modern. So the next subject that we'll flow into and talk about is privacy. So let's start talking about some of the core strengths and fundamentals of blockchain. So why is blockchain so trusted? Blockchain is built on a total transparency and verifiability. Every transaction is recorded on a public ledger that anyone can check forever. Nothing can be faked or changed once it's there. That openness creates huge trust. No middleman needed, no hidden tricks, just provable facts you can check. I'll give you a simple everyday example of how that transparency works. So let's say I send you $100 worth of Bitcoin from my wallet, and you or anybody can now look up my wallet address and see every single transaction that's ever been made from my address. Who sent me money, when, how much, to which address, and vice versa. It's all visible, all verifiable, not deletable. That full history is exactly why people trust blockchain so much. You can verify everything. So why this strength also becomes a huge problem for big institutions. So in that case, in that example, we're just sending tokens from one person to another person, or from one address to another address. But as I've been talking about these technologies for these large institutions, there's more robust, more involved, more sensitive, and more amounts of data that are being tokenized and transferred. So for simple crypto transfers, that's great. But these large banks, hedge funds, and asset managers are handling trillions of dollars in complex deals packed with super sensitive information. Clients' names, exact trade amounts, business strategies, compliance details, proprietary pricing. If it all went on a public blockchain, competitors, hackers, or even the public could see everything. That's obviously not acceptable. They'd never risk leaking that kind of data. So they have this impossible choice that the institutions faced. They were stuck. Either use blockchain and lose privacy, which is bad for security and business and settlement speed. Those are all the benefits they would be forfeiting. Or keep the privacy and lose blockchain's trust, speed, and efficiency. So it looked like you couldn't have both until Chainlink solved that paradox. This is how Chainlink fixes it. Privacy without losing trust. So Chainlink lets institutions keep sensitive details completely hidden while still proving everything is legitimate and verifiable. They use a suite of data services and technologies that Chainlink has created, one being CRE, or Chainlink Runtime Environment, which is the conductor that automates secure workflows between old finance systems and blockchain. Then you have CCIP, which you've heard me talk about many times, the cross-chain across different chains interoperability protocol. It moves assets and data privately across different blockchains. There's confidential compute. It runs calculations in a secure, locked vault. So no one sees the private information inside that vault. It all happens within this siloed calculation, and then the results are allowed to exit. There's Blockchain Privacy Manager, which also safely connects private blockchains to public ones without exposing secrets. So that all sounds great and a little bit complex, but let me give you a couple of examples I thought of. So one would be, let's say you go to the bar and you'd have the bouncer wants to see, let's say you want to make sure you're 21. Not that we have that problem anymore, but you hand them your ID and they see your address, they see when you were born, what your birthday is, they have a lot of information on you. Maybe, if you have your home address on there. So instead, this type of transaction would just allow the bouncer to verify yes, he's over 21 or no, he's not, without seeing any of that sensitive information. And it can go on from there. Let's say a store swipes your credit card, confirms it's valid, and that you have funds without showing your full bank balance or spending history. You wouldn't have to give them the billing address, just not having to give information that's not needed for that transaction. Go to a car dealership and they want to run your credit. Let's say you're going to a used car dealership and there's some shady looking dude who wants to have your credit run. Well, they can verify that you should be approved without reading your entire credit report, all your debts, all your information. I could give you more examples, but I think that's plenty. So the bottom line is why this unlocks everything. Chainlink turns the old either privacy or trust problem into both. Institutions can finally use blockchain for real, high-value deals without exposing secrets, unlocking trillions in tokenized finance, faster settlements, lower costs, and safer markets. This is one of the biggest reasons Chainlink is positioned to capture massive adoption in the coming years. So those advancements that we just discussed in some detail, like the privacy and DTCC and many others, they're legitimately impressive and important. But I wouldn't blame you if you asked me, Zach, why are we trading under $10 then? Because that's a question that I ask myself often, and something that's a little bit complex but worth exploring. So the first reason I would give is that Chainlink is a middleware. It's the invisible backbone. Behind the scenes, it's doing all the tech. It connects systems with anyone ever noticing, without anyone ever noticing. Have you ever heard of TCP/IP? It stands for Transmission Control Protocol/Internet Protocol. The reason I ask that, it's a little bit rhetorical because most people haven't heard of it. But it's the basic rules that let every computer talk to every other computer. It's what makes the world of web work. So without it, the entire internet is impossible. Without TCP, there's no web browsing, no emails, no apps. But you never think about it when you're using Google or Gmail or Netflix. It's just there, working behind the scenes quietly. That's Chainlink. Chainlink is the plumbing for blockchain and traditional finance, powering secure data, cross-chain moves, and settlements without the fanfare. So if that's the case, then how are we going to get our price appreciation? Well, without the retail excitement, price growth has to come from real utility and knowledgeable investors, institutions, funds, and tech-savvy whales who see the value. It has to become so fundamental to finance that demand builds it organically from adoption. Think how TCP/IP exploded the internet's value over time. Not overnight. This path is grinding and slow, but it's sustainable. As more trillions flow through Chainlink, the token's scarcity and its use drive appreciation. We're still in that building phase now. Also, the tokenomics needed to shift, capturing value inside the token. So while TCP/IP is a very important protocol that makes the internet work, there's not a company called TCP that you can invest in directly. So for years, Chainlink was focused on building killer tech and getting real adoption from giants like Swift and MasterCard. The tokenomics, which is a term just to describe how the token captures that value, took a back seat. Many other crypto projects kind of reversed that, flipped that priority. They were all in about trying to make their tokenomics great, trying to hype their token, because they weren't in it for actually changing the world. They wanted to just make money up front. But recently, Chainlink has ramped up their tokenomics big time. They're making sure the network's real-world success flows directly into Link's value through demand, scarcity, and rewards. So one thing is their key tokenomics improvements is their rewards program. It's a Chainlink's rewards program, which is now on its second season, lets stakers earn extra tokens from different ecosystem projects. So if you hold the Chainlink token and stake it, you get other projects' tokens that are startups that are using Chainlink's technology for subsidized low prices. And that's happened to us and myself holding Chainlink token. We've gotten payments in the several $1,000s multiple times for that. There's also advancements in the staking program itself, and we're earning APR on holding the Chainlink token. And there's also the Chainlink Reserve. The Chainlink Reserve it's basically a system where the Chainlink team garners income from institutions using their technology, and they take that income and they purchase Chainlink tokens and take them off market. It's a reserve, so it's reducing the supply, which is going to increase the price. So continually, as income increases, the reserve will get larger and larger, creating a more scarcity for the Chainlink token. So to wrap that all up, and that, on this subject, these changes mean the amazing accomplishments aren't just tech wins. They're now going to fuel token value more directly. It's still tied to broader crypto sentiment, like we talked about before. If Bitcoin crashes, Chainlink's going to fall down with it. If Bitcoin is really surging, it's going to come up with it as well. But Chainlink is going to need to separate it from the pack. It's going to need to operate on the utility kind of mindset more. So basically, I would say, hang in there. The fundamentals are stronger than ever. And you and I both hope that the appreciation in price is going to translate sooner than later. I've been holding Chainlink since 2017. When I came in at sub $1, I watched it rise to above $50, back down to $5, and now we're sitting at $8. It's been at 30, before that 40. The long story short is that the fundamentals are stronger than ever. This price lag just creates opportunity and really requires a lot of patience. The reasons we're still all in on Chainlink have not changed. The fund stays concentrated in Link because it is infrastructure, not hype. The disconnect now sets up the opportunity for later. Looking outwards to 2026, we're seeing clearer rules in terms of regulation. We're seeing exploding stablecoin usage. Tokenized assets are becoming mainstream. We've seen Bitcoin potential highs, and the tokenomics of Chainlink continually improving. So for 2025, we built a lot of foundation. For 2026 and the coming years after, I'm hoping that's when it pays off. So I'd like to thank you and for giving me the trust and the patience with me. Let's just hang in there and watch this all unfold. This is Zach for DeFi Gravity Investments. Take care.